All right, long-term VWAPs. Probably most of you have already been aware that you're going to learn this. It's one of the special pieces of the puzzle for sure. So let's get into it. Quick reminder, the goal is not clarity. The goal is simply to recognize when we have clarity. Don't make that mistake as you start to learn some very awesome things as we make our read on narrative even stronger, granted much more complex. But as you begin to have your eyes open to some of these things, you might get some idea in your head that your job is to use these awesome tools and always have clarity. The fact is that we're never always going to have clarity, but I am giving you some really good frameworks to very often have some clarity, but not always. The goal is not clarity. The goal is to recognize where you have it and where you don't. Chapter 1, general concepts here. Today, we're going to get down and dirty all about narrative, and we're going to take it from just structural narrative alone to now its highest form, which is going to be the full narrative read across long-term VWAPs and composite structures. You already know how to access trades with our trading time frame developing value area. So we understand both the concepts of, at this point in time, prior value. That could be yesterday, that could be a 3-day CVA, doesn't matter. You understand prior value and you understand developing value. I'm telling you, we're going to get complex today, but quite frankly, you already know how to do everything I'm about to tell you on a basic level, because we're just going to repeat the concepts of laws of market dynamics, prior value, developing value. Okay. Continue to build on narrative and how we see that, right? Current condition is great. Are we rotational or are we imbalanced? That's great, but we have to go deeper each and every session. Where's a place where there's a key recent rejection? Get used to looking and thinking about that word a lot. Do we have a key recent rejection we can identify? That's going to give us a nice bias. It's going to give us a nice line in the sand. What about on the other end? Likely destinations, right? I think key recent rejections and likely destinations are more important to narrative than defining the current condition. That sounds kind of crazy because it's all about the current condition, with one or two little twists on the rules, which we might see today. There's an acronym for you, LTVW, or LTVW apostrophe lowercase s for plural. Long-term VWAPs. We're going to use both prior and developing values for the year, for the quarter, for the month, and for the week. Not like the rolling 5 days or rolling prior 12 months for the year, but just pure, simple calendar years, quarters, months, weeks. We're going to use monthly and weekly quite a bit, not just today, like ongoing, NADRO trading, at least for intraday traders, okay? Remember, you can apply this stuff. You can tweak it to different time frames, lower than what I am doing here, much higher than what I'm doing here. And you're just going to use different tools. You might focus almost exclusively on the yearly and the quarterly, and the monthly might become your trading time frame, or the weekly might be your trading time frame. So let's build out a chart book. So here is our ES chart book. Let's do it like this. Whatever. I'm not going to overthink it. because I'm just gonna, it's all gonna be on one monitor here, which is can be difficult. So let's see here. I'm just gonna duplicate this chart. We will make it yearly. And we're actually going to make it instead of an intraday chart. Actually, I'll wait and do that real quick. Let's actually make this, sorry. We'll go back and do that. We'll start with the quarterly just for the heck of it. So the quarterly, it's going to need a good amount of data, which I'll wait to do. What do we have on here? Just the ECI VWAP. So let's go to our VWAP, and instead of making it daily, what do you think we'll make it? Oh, how about quarterly? Sounds good. We're going to do some other things too. We are going to extend the, this is going in half increments, remember? So VWAP 0.5, 2 is plus or minus 1. That is our developing value high and low. We're going to extend the prior versions of that. That's going to become our prior value on these charts. You'll see what I'm talking about. Everything else is probably fine. Let's just do that. And let's make this, I forget what mine are actually. Let's make it a 300,000 volume chart. We'll just do this from scratch. And we are going to need a lot of days in here. So let's just make it 220. I'll just duplicate that chart again. Let's make 50,000 volume bar chart. 90 days will be fine. And let's make that VWAP, once it loads, a monthly. Oh, it's going to change the name. Monthly, extend the 2. Oh, I actually extend the VWAP as well. I'm sorry. It's not as important. You guys know kind of points of control don't matter as much. So that looks too small. So let's make this 150,000 volume. This is also pretty small. So I'm just going to make this a 500,000 volume chart. What do we have? Drawings mapped over? I don't want drawings mapped over from anywhere. We'll duplicate this one to make a weekly. $60 days, 50,000 volume, rename it weekly, and then we'll change our VWAP, obviously. That'll be fine for now. You don't, if you are, we're looking at scrunched views of these charts, but when you look at this, I can see 3 full quarters here. So that's plenty to be able to see whenever I'm really analyzing that chart. The rule of thumb is if you are going to have a chart that's in a very fixed position, let's say that you did have them like, this or something, you really do want to be able to see at least kind of a full periodicity, in this case, a quarter, in this case, a month, in this case, a week. if you had them kind of at full size. You want to be able to see that. So we might make this a little bit bigger over here. 70,000. Ultimately, me tweaking these numbers is not going to change a thing. Let's highlight the point of control, the VWAP from last period. There you go. It's really not as big of a deal as you might think. There are no magic settings. I just like to be able to see a full period under kind of a normal view. And then finally, we'll make a yearly. I'm just going to duplicate this one. Bring it up here. And the yearly, for me, is typically a daily chart. So that means instead of intraday, we make it a historical chart. 2,000 something days is plenty. And obviously we need to make this a yearly VWAP. Apply, done. So something like this would be a good looking chart book here. Oh, need to change our name here. Yearly, quarterly, monthly, weekly. So I just wanted to walk you guys through building out those chart books. We're going to come back to them. Don't you worry. But now let's go back to talking about things within our presentation. We said LTVW, that stands for long-term VWAP. Yes, I realize maybe it should just be LTV, but I somehow made it like phonetically long-term VWAP, like syllables. So whatever, that's what it is. No one complains. We have weekly developing value area high. You want to put a W and then a dash and then our normal like DVAH, right? That we might use intraday or something. A DVAH by itself signifies that's your trading time frame. And for us, for me, for a lot of us as intraday traders, that's your intraday daily DVA. So if you put DVAL, we know what you're talking about. That's today's. If you put PVAL, that's yesterday's value area low. But if you put an M in front of it, well, that means we're talking about a return pullback of monthly prior value area low. Now, these last two things here I think are important. A breakout pullback and a return pullback. Old students, you better pay attention here because we're using new terminology. Breakout pullbacks and return pullbacks are terms reserved for those setups in regard to prior value, prior days, composite value areas, or long-term VWAP prior value areas, any form of prior value, breakout pullbacks and return pullbacks. The two acronyms we use for DVA setups, regardless of time frame, intraday or long-term VWAPs, are IPBs for imbalance pullbacks and EFs for extreme fades. Real quick, because I think it should have been included here. Hey, yeah, for a lot of you guys, we have been using a lot of different terms in some ways. I just wanted to clear that up for today. Let's see here. So when we have our developing value area, let's say this is 1 week. Wherever developing value area high and developing value area low finish the week, this is week 1. For week 2, that becomes prior value area high and prior value area low, and that would be weekly prior value area low and weekly prior value area high. And then the week, let's say we open up right here, right? The week will have its own developing value, right? So each period, whether it's a week or a month or a year, whatever, is going to have its developing value area and its prior value area. And then the new developing for this week on week 2 becomes prior value area for week 3. It's no different than a TPO forming throughout the day, and you end up with value. And remember, it developed until it got there. And then guess what? For tomorrow, that becomes your prior value area, right? It's the same concept. We're just using a different measure, in this case, a DVA measure, instead of volume profile or market profile to build out where we call prior value. Now, this is common sense, but I just want to say it. Sometimes it's like a real screwball for people. It's hard to process, but it's common sense. Don't let it trip you up. Any long-term VWAP only becomes usable after the next lower periodicity begins its second cycle. Otherwise, they're just the exact same thing. So let's think about it. It's January 2nd. It's Monday. We got a brand new year. It's the first trading day of the year. On that Monday, what's the difference between the yearly developing value area, the quarterly developing value area, the monthly, the weekly, and that day's developing value area? What's the difference? Nothing. They're all the exact same thing because we don't have time progress so that some of these periodicities can begin becoming unique. Okay, it is common sense, but I've seen people come up with like fancy tables to describe this and all kinds of things, but like you don't need all that. Maybe you do, and if you do, that's fine. But anyways, after the first day is done, then we have 2 DVAs for that Tuesday. We have Tuesday's developing value area, and now we have a weekly, right? Because the weekly is going to be comprised of yesterday, Monday, January the 2nd. And now as it continues evolving into Tuesday, it's unique compared to Tuesdays which resets. But guess what? The week is the same as the month, is the same as the quarter and the year. So those are all still duplicates, right? Once we have 1 week done, well, then we're going to have a daily and a weekly and a monthly. And then once we finish Q1, then we're going to have a daily, a weekly, a monthly, and a quarterly, like that type of stuff, okay? So common sense, but always good to just point that out. Reading a long-term VWAP, singular term, narrative. You really already know how to do this. Laws of market dynamics, right? We traverse areas, imbalance. I've taught you guys how to use DVA specifically. We're going to be using DVA, extreme fades and imbalance pullbacks. You understand breakout pullbacks and return pullbacks of prior value. We know how to see where kind of condition changes between balance and imbalance. We know how to identify recent key rejections and see likely destinations based on a lot of the above things. So let's hop back into a chart real quick. And we built out this S&P chart book. I'm going to save it real quick. Let's just look at and just kind of narrate S&P because I think it's interesting, right, to look at like one of the most important stock markets in the world and just like narrate it from this newfound perspective that we have. How about we go back to, I don't know, I think 2016 was a really interesting year. What happened here in June of 2016? You guys in the UK should know. Brexit. This was Brexit. So one freaking day we just went, boom, limit down right into VWAP for the year after having been imbalanced up. And by the way, we were attempting to begin to break out pullback off last year's value. And then boom, Brexit, just this rip to VWAP to the tick and then rip back higher, a little micro imbalance pullback and breakout pullback of prior value. And then we start to trend higher. The trend falls apart right here. This is a little small return, extreme fade where the imbalance fails. And then what do? What happened in November of 2016? Trump. So this was into the night Trump got elected. Limit down into VWAP again, and then rips higher by the the end of the session and whatnot the following day. And then it's pretty much an attempt at kind of an imbalance pullback. And by the way, that's an overall breakout pullback of prior value, finally confirming that. And then it's off to the races. 2017, what happens? We try and get imbalanced up early. It falls apart, goes to VWAP, finds support, extreme fade from the upper end of developing value high for the year, which brings us to VWAP again. Then a couple little tiny attempts to stay imbalanced and a little rug pull. And then a couple of nice imbalance pullbacks for the year, which actually sends us into kind of ridiculous fast trend mode there as well coming into 2018. We never interacted with prior value in 17, by the way. 2018, rug pull, February, I believe. Yeah, February was really volatile, comes down, prior value, finds support, extreme fade here as we return into developing value. We go to the upper end, come back out, try and get imbalance down, but prior value again finds support. Beautiful little deal here, extreme fade as we can't remain imbalanced down and we keep finding support, which leads us to the destination across developing value. A couple of VWAP supports here, and then a couple imbalance pullbacks as we go higher. That falls apart. Never really got an extreme fade off the upper end. It just kind of went to the lower extreme and then tries to bounce, can't get to the upper end. Again, lower extreme, tries to bounce, can't get to the upper end, and that leads to an end of year sell-off right there. 2019 opens up, rip roar. Right here's where we inflect with prior value. Oh, and by the way, that we went all the way across the prior year's value there into the end of the year. That's where we found support and started to bounce, which leads us to 2019. Little micro return pullback while we're imbalanced, by the way. Now granted, this is still January, so you'd still be using like monthly developing value area on a smaller time frame to watch this imbalance. Anyways, we hold back inside. Imbalance holds. We go to the upper end. We try and break out pullback. The imbalance fails. And so that's a potential place to say, okay, we're not holding cleanly outside prior value, and that's a place to short. Granted, the prior point of control and VWAP hold us here. VWAP holds a lot on some of these longer time frames in ES, if you haven't noticed yet. Didn't make it across developing value and prior value. Couldn't make it. A couple more holds from VWAP, right? And now we're starting to see that breakout pullback of prior value holding, confluent with VWAP, confluent with prior value high. Beautiful trade locations there. And ultimately, we really rip into the end of the year, which brings us to the, I was about to say magnificent 2020, but it's been anything but I guess trading wise, it's been pretty magnificent. Anyways, starting to grind higher. VWAP still developing here. It's hard to really make much of it, but then boom, sell off, imbalance pullback with a kind of a sloppy return pullback of prior value, right? Ultimately, it goes halfway through it, pulls back, can't stay back above, can't get back into developing value. And that's the move. There's the destination right there across prior value. As you might could tell, there's more to it. So, further imbalance, we try and hold the imbalance pullback right there. It's kind of hard to see, I know, right here. And ultimately, the 1.5 stops us. And then we pop back into prior value, and that holds. Kind of complex, right? We'd love to see a extreme fade down here of developing value, but we just couldn't get it. We continue to hold prior value. It zips across and then gets us back across developing value. Then a couple breakout pullbacks of prior value, which leads to kind of this astronomical imbalance up until where I recently tweeted, you may have seen, 35.80 was where I was looking for the top on a medium-term basis. And today, why do you think I'm talking about swing longs in my prep? You can already see from this one chart here. So We don't interact with the yearly a lot. There's only like 4 or 5 things a year where it's pretty impactful, I think. But my goodness, to be able to narrate the market in this way, um, it's the stuff dreams are made of. It's beautiful stuff. So there's the past 5-6 years, whatever I just went through, of the freaking S&P 500, and a lot of it makes sense at a lot of times, and there's some long-term destinations and swing trade opportunities and all kinds of really cool stuff. You want to practice going through almost like I did there, just like you did building TPO charts and building CVAs, I should say, and practice being able to narrate that narrative like I just did, and as comfortable as I just did, and seeing what was important and what was just finishing a destination or whatever, where things changed, where there were inflections, all that good stuff. Now, what about multiple long-term VWAPs, right? There's a hierarchy to this. It's going to sound a little complicated. Maybe one day I can find a way of saying it in a better way, but this is as good as I know how to say it right now. Between the year, the quarter, the month, and the week, I've already told you we're going to use the month and the week a lot more, right? But the higher time frames, right, when comparing the quarter and the week, the quarter is more important. Between the year and the month, the year is more important. I put that in quotes for a reason, because it's like, yeah, it kind of carries more weight because I think there's larger time frame participants and a larger time frame sense of inventory that's connected to, but it's less precise. It's less usable. It's less immediately usable as an intraday trader. Okay. Yeah. Always have to keep in mind. I know there's people here that like to swing trade and whatnot, and they're here for that. So keep in mind what I say is relative to kind of what I do, and you can adapt. Lower time frames are less important, but they're more immediately usable. They're more precise. You can take extreme fades off a weekly with some real sense of precision. You can almost just trade looking at that chart. Whereas the yearly, you're going to go above and below a reference by 50 handles and not even notice. So it's not precise. It's not something you could just say, well, I'm going to use like an intraday rotation stop here, and if that doesn't work, then the narrative is wrong, or whatever. It's just, you could just chop yourself to death trying to do that. So the final point down here is very important. We often defer to the lower time frames, and that could be the weekly, in order to gain clarity on exactly how a higher time frame narrative reads, such as the monthly or the quarterly, when and where that's ready to participate in. So we're going to look at a lot of examples of that towards the end. But for now, I'll just tell you, if the quarterly is forming a nice imbalance pullback, right? This is the quarterly picture. And you're saying, okay, I want to be getting long here. Like, this is an imbalance pullback. Like, I want to be getting long. But this is a huge freaking area. And it might take 3 or 4 days for this to start to turn up and give you some meaningful entry in terms of trade. You could just buy some call options and hope for the best, but that's not what I'm teaching here, okay? What could we do? Well, the market's been heading down, right? This is the quarterly. What might the weekly look like? Well, maybe the weekly has been imbalanced down, right? During this period. Here's the weekly overlaid on top of that. What might we look for to participate in this quarterly imbalance pullback long? Oh, wait for the weekly imbalance to fail and then look for extreme fade opportunities. They're not always going to be that perfect, and they're not always going to give this to us, but a lot of times they will. So defer to that lower time frame, because think about it. This is dissonance, right? What the heck do you do with this? Here's where we start to begin to understand the complexity. Well, the quarterly's telling me I want to be long, but the weekly's imbalanced down. Like, what should I do? Which one should I believe? Well, the quarterly's more important, but you could continue shorting the weekly imbalance as long as it keeps going down, especially when you now think about combining that with your intraday tools. My goodness, right? There's plenty of room for making those trades before you start to see, aha, something's really falling apart here on the downside. Oh, the weekly's going rotational. Oh, the intraday's imbalanced up. Oh, this makes a lot of sense to be getting long from this quarterly developing value area imbalance pullback. You start to put it all together. And again, I'm getting ahead of myself, but the main point is defer to the lower time frames in order to gain more tradable clarity, precision, better timing on some of these higher time frame ideas. Now, there's a difference in how we treat extremes, okay? And let's just start by asking some questions based on what we do know, based on our intraday developing value area that we took a look at. Do we go long at the +2? What do you think, chat? We're imbalanced up or something, or heck, we're even rotational. Doesn't matter, okay? Here's the +2 here, and here's the +2 here. Is it a good idea to go long into the +2? Is it a good idea to go long into the +2? No. Okay, 100% correct answers. No, not a good idea. Do we short there though? Well, in the rotational one, yes, I'll give you that. Okay, that's a great place to short, especially if narrative it checks out and tells you that makes sense. Oh, it's a great place to short. Momentum shift, upper extreme. It's an extreme fade. It's a perfect setup. Nothing wrong with that. On this situation though, over here, we don't short here, especially if it's a established imbalance, right? That we don't just short. And a lot of times, look, the 2 is going to be something of an extreme, but we don't just short there intraday. Why? It's too fast paced. It's typically going to be something where it kind of messes you up from perhaps the better trade. It's going against an imbalance, which doesn't really make a lot of sense. You're just fighting a lot of things intraday. Things are immediately against you. So that's not, we don't just short, here intraday. That doesn't make much sense. However, if we look at this chart here that I'm drawing here, forget about this. And I tell you that this is the yearly or the quarterly, and it's rejecting a 2. Or even better, you find multiple long-term VWAPs who are hitting extremes. That's going to be something that shapes our bias for that session. I don't care that the quarterly and the yearly are imbalanced up. If they're all hitting extremes, sure, I'll pay attention to what unfolds intraday. I might go long, I might go short. There's some options. But what's my favorite trade going to be? What's my hypo 1 going to be? We reject those extremes and work our way back towards some of these longer term VWAP developing value areas. So therefore, if we start to break down intraday, or I can fade a rotational upper extreme intraday, or I can go with an imbalance down intraday, or it's a breakout pullback of a 2-day CVA lower, right? And this is the context on the yearly or the quarterly or something, I'm really bearish because the yearly is probably going to be pulling back somewhere. And this is telling us it's bearish based on recent structure. And if you've got your, an intraday DVA trade location as well, we're starting to really put together some trade ideas here. So the point is, as I'm being very long-winded, is that even when a market is imbalanced up on some of these long-term VWAPs, especially the monthly, quarterly, yearly, weekly is getting closer to intraday, so it's a little tougher. Not as much meat on those bones to make the profits. When we're hitting those extremes, even if we're imbalanced up in those situations, my DMI, those type things, like my prep, my hypos, I'll be looking to fade those extremes. I'll be looking first and foremost. And am I going to blindly do it? Am I just going to throw some limit orders up and get short because I think it should go down? No, that's not what we do. But that doesn't mean we can't have our main hypo that says if it starts to break down, if you start to get confirmation on lower and lower time frames that this is happening, then we're going to go with that trade. It's our best idea for the day. And as you saw my tweet, nobody called the top in the S&P more precisely than I did. And there's a whole lot of chest beating going around about people who'd been saying it's overheated for 4 weeks, and now they're saying, yeah, I told you so. But you guys are getting the tools to actually really be better than that. All right, let's see here. What do we have going on here? This was the exact situation I've been talking about here. We were, wait, no, it's not. Honestly, guys, I don't know what this slide is and what I'm supposed to tell you about it. I'm guessing this is the yearly, quarterly, monthly, weekly here. Let's see if I can figure out something to tell you. I have no idea what this is supposed to. It looks like we're imbalanced down here for the year. It must, I remember doing this. The quarter here doesn't count because it was a new quarter. So this is the same as the monthly. They're the same. So we're not going to even pay much attention to that. We're pushing, oh, it's just an example of pushing some upper extremes. So we're pushing the 1.5 into the high here on the monthly. And we're pushing the 2 right here on the weekly. And that's within a beautiful context of coming up here, that this high at this point and this point is up here into kind of an imbalance pullback down. So this is crude oil, a recent imbalance pullback for the year, which was fading upper extremes on lower time frames. It made a lot of sense. And this was a trade that worked very, very well. This was when it looks like when things started to really, really crack. And as you guys know, we went, sub 20. And it was all from this exact point that we're highlighting here. So that's what I wanted to tell you for that slide. All right. Use some slide notes, Merritt. Okay. Confluence. Confluence is going to be very important, right? That's one of the big reads on narrative, right? And today's all about narrative. So confluence is very important. Confluence can take 2 different forms. You can have price confluence. We have monthly prior value high, okay, right here. And we have weekly developing value area here. So right here, we have some confluence. Let's say we're coming into the open and we're doing our prep. Well, guess what? That better be on your radar as a bullish line in the sand. That's going to be a green zone on my DMI, right? We have price confluence, confluence of multiple references from our read on narrative at the same area, grouped together. That makes a narrative stronger. In this case, we also have our second type of confluence, which is directional confluence, which doesn't have to be references near each other. So let's do a different example to tell you, it's the definition of directional confluence or bias confluence is quite simply that. You have a monthly chart that has done something like this. Okay. What do we think about this? Well, we're bullish against the monthly lower extreme here. And the weekly looks like this. I don't know. Developing value area. It's imbalanced up. This price level and this price level don't have to be anywhere near the same. In fact, let's make it look like this. There you go. So really, this weekly is probably about right here, and we're going to look at, it's almost like a continuation play on the monthly, right? Where it's in open space on its way to the destination. But on the weekly, it's an actual imbalance pullback. But at the moment we're doing the analysis, which was back here, when we're doing our hypos or whatever, we would say we've got directional confluence. We've got some form of confluence between the monthly narrative and the weekly narrative, which both have us bullish. Their most important references were nowhere near each other. They were 75 cents apart in crude oil. Okay, so it's important. Don't always just look for stacked, like multiple references at the same price levels. When you're putting together a complex multi-time frame narrative read, which we're going to talk about doing, directional confluence is very important. How many of our long-term VWAPs and different things are bullish today? That's going to matter. If you got one thing that's bullish and you've got 5 other things that are really bearish, are you bullish or bearish that day, right? Common sense, but we want to put this into process. We want to think about these things. Also, price confluence, grouped references in close proximity to each other, they also matter. It makes for some tighter lines in the sands, and it makes for some good trading. What are we going to do with developing value high, developing value low, VWAP, prior value high, points of control, composite value high, composite value point of control, weekly developing value low, weekly developing value high, weekly VWAP, monthly prior value low, yearly developing value high. Oh, there's an overnight balance. Oh, we've also got yesterday's high. And are you kidding me? That's going to be one of those like comical charts that you see people have that look like this. Look at these references. Look how many we have. It doesn't matter where quarterly prior value high is necessarily. It doesn't matter where weekly developing value area low is necessarily. Your job is going to be to, the name of the slide here, rank and distill. Identify where some of the best narratives are, and you know how to rank narratives, recency and shift of condition, all those type things. Where is their confluence? We now understand there's 2 forms of confluence. What can you find that's the strongest and most clear? And then forget about other things. We're not going to use 32 plus references every day. And you're not going to get into a trade and be like, oh, there's a reference we're coming into. Well, that may not matter at all. What's your likely destination based on what you ranked and distilled information down to come up with your hypos and what was most likely on the day? Some people get the idea, and it's a good idea that, you know what, I want to be able to really look for confluence. So I'm going to take all these references and I'm going to map them over to one chart, my confluence chart. Well, we all know what that chart looks like, right? Not very helpful. What's helpful is learning to rank and distill information from these references and determine which of them are most important today. Which of them matter to you today? Might be one of them, might be none of them, might be a group of 3 of them that agree with each other. There might be dissonance. We're going to talk about all this. Remember, find clarity of narrative where it exists. If you've got recently in crude oil for the year, this is the yearly developing value. And you got VWAP right here, and it's looked like this for like 3 months, right? And recently we had a couple of VWAP rejections in crude, and then it's kind of like this right now. Do you think I've been using this level or this level in part of my preps or part of my daily game plans or hypos or anything? No. They don't matter whatsoever. Am I kind of more bearish, like immediately the yearly right now in crude? Yes, because we rejected VWAP a couple times and maybe we're working our way down here. So yeah, I'm leaning bearish directionally on that chart, but enough to where it's going to make me want to get short intraday just based on the yearly and now I want to short intraday? No, not even close, right? But there's been other trades where we've broken out and retested a prior value area and things like that on, like the monthly or something. I forget what it was exactly. And that's something to really lean off of. That's a condition change, a retest, great line in the sand. And by the way, it's occurring within the context of some yearly VWAP projections. So it's beautiful. Real quick, overnight balance is, it's a minor reference. It's a lesser reference, but again, it's a more immediate reference. If you've got an overnight, the only thing I care about the overnight trade, other than looking at my long-term VWAP charts or whatever and finding recent key rejections, a lot of times I know why the overnight low is the overnight low. I don't care that it's 25, 60, and 75 cents. I care that it rejected XYZ important confluent area. It's meaningful to me. The only thing I care about the overnight session in terms of a price chart or profile is if there's a substantial sideways balance going on. And then and only then will I kind of pay attention to, okay, we might need to watch if there's going to be further boring rotational behavior inside of this overnight balance. If anything significant is going to happen, we're going to have to break out of this overnight balance. That's the only thing I use that for. So confluence is easy, guys. Confluence, oh yeah, this agrees with this, or this is a reference that's stacked with another reference. That's easy. There's no confusion. But that's not what separates the best traders from the amateurs. Handling dissonance, however, is. Dissonance, when things disagree, when they cause conflict in your view and whatnot, is what we mean by that. Dissonance is almost always going to be present. But remember, we don't weight everything the same. All right? The weekly's imbalance down. We talked about that almost exact scenario earlier. Weekly's imbalance down, but the monthly is rotational. So should we be looking to get long the monthly at its developing value low on like an extreme fade? Or should we be focused on continued shorts with the weekly imbalance down? Which is it? Well, there's more to the story, hopefully, not always, but what are some things we might could look to find out? And let's draw this, right? Weekly is imbalance down, right? And the monthly is rotational, and let's say that we're coming into here. So are you going to look to potentially short from here, or are you potentially going to be looking to get long from here? Well, obviously, you could wait for things to clear up, which I'm not sure if I have on this list or not, but we'll come back to that if that's the case. Let's go through them one at a time. What does the collective full analysis say, right? We haven't talked about CVA structure. We haven't talked about what the yearly or quarterly might be telling us. There might be other charts which also are kind of whispering to us or maybe screaming at us that are saying, you want to be short. Go with the weekly imbalance down and just be cautious that it's a lower extreme on the monthly. Otherwise, we think the monthly is going to get imbalanced down because it's a beautiful short setup on the yearly, right? Something like that. What's the full analysis? Is it a significant break or failure of leaving a composite structure, right? That might lean us more towards wanting to get long despite the weekly being imbalanced down. Obviously, we're always going to defer to our intraday, our trading time frame, to make any of those decisions, right? We're never just sticking our neck out there based on this narrative stuff. Again, what does structural narrative say? That's repetitive now. What does our CVA narrative type say? Has the weekly been imbalanced down for a long time, or is it a fresh shift to imbalance down? That matters, right? Energy. Maybe the weekly had been balanced and now it just broke and it's just getting imbalanced down. There's probably more energy behind that move than one where the weekly's just been imbalanced down since Tuesday and now it's Friday. That's the weakest thing on this list. You know, maybe I could even remove that. But there is something to that. Things don't stay imbalanced forever, but I just want to be very careful with that. We don't look at something and predict, oh, it's been imbalanced down for 3 days now. It can't continue. I'm going to fade it. That's not what I mean by that. Just be aware of how long it's been going on or if it's a fresh shift. Remember, strength of narrative. How recently was the condition shift? Are there other things on the monthly, right? Maybe instead of just viewing the monthly quite simply as, oh, it's rotational and we're at the lower extreme, so we should be bullish. What if the monthly's been looking like this? Right? With that compression type move into it, guess what? Keep going with the weekly. You might get a really good break here. Where's the monthly balance occurring relative to its prior value, right? Maybe if we do some more, maybe monthly prior value is like here, okay? And then we've been kind of rotational, but then recently we saw this, boom, breakout pullback from monthly prior value. And now it's kind of coming into this area. Well, we're bullish from here. We're bearish from here. There's dissonance there. So this chart's almost neutral and the weekly's imbalanced down. How do you handle all this? Where is the all clear? So that was the final thing that I said. Going back to the basic example of monthly, this first section of the monthly here. Monthly's imbalanced down. It's coming to a lower extreme. So on our intraday chart, we'll say, okay, the monthly is a bull zone from here. But the weekly, where its developing value area low is for the imbalance pullback, is here. And that's bearish, right? That's where you'll see on my DMI, I'll show you like a zone of dissonance, right? A bear zone above, a bull zone below. We might chop in between. But what's the question? Where's the all clear? The dissonance is resolved if we get this or if we get this. If you break and hold above the bear zone, that's a return pullback, you know, of what's going on in the weekly. I shouldn't have called it that. It's an extreme fade opportunity because we've gone rotational on the weekly. And the monthly was already bullish. So now everybody's bullish, right? That's scenario A right up here. Scenario B is for the monthly to break down. Maybe the monthly offers an imbalance pullback. And the weekly, as we know, has already been imbalanced. So it's just more of the same. So they're both bearish below here. That's waiting for the all clear. You might take some trades in this middle zone if it's choppy, but are you going to hold a core position looking for you know, a 40 handle move in the S&P? Probably not. You should probably scalp those 6 points and be happy with those until something else a little sexier shows up for us. So, handling dissonance. We want to look at where we can find the most clarity, where the strongest narratives are, the clearest narratives are. We talked a long time ago about finding the strongest narratives. Same stuff applies here. Not every line or reference matters. Now, sometimes there is like there's always some dissonance, right? You're never, well, I shouldn't say never, but very rarely is it where you look at the yearly and the quarterly and the monthly and the weekly and the CVA and prior value and you say, it's all bullish. My goodness, I know what to do here. That's pretty rare. Most of the times you're going to find like a pretty convincing bullish story, but then something is bearish and you're like, well, screw you, bearish guy. Everything's bullish, so I'm bullish, right? You rank and distill all that and you find out what's the strongest read. You've got the most confluence, you've got the most agreement, and you go with that and you ignore something else. However, sometimes there's a really good narrative on the downside and there's a really good narrative on the upside. worthwhile dissonance, significant dissonance. You're going to have some options, and I don't have the answers for you. You could pick one, right? Some of this comes down to niche, I think, right? You may have a bullish breakout pullback of a 3-day CVA, but it's into the upper extreme on the monthly, which is rotational, and you also feels very strong. You might have, as a rule, I always go with structural breakouts. And so forget the monthly, right? You could just pick one. Or you could wait for things to clear up, right? If you've got a breakout pullback structurally, but let's come here and draw the monthly. What if the monthly was like this, right? Well, where's the all clear? Oh, well, we got to wait for the monthly to get imbalanced, and then we could go for it. So you could just wait for the dissonance to clear up. You could pick one. If the area in between conflicting narratives is wide enough, you could scalp in between. A lot of times, if you've got a really bearish level here and a really bullish level here, you might see some chop in here. And you might find shorter term trades to take. But that's a little advanced for kind of beginner lessons here. We're going to combine long-term VWAP read with structural narrative read. Sometimes it's going to be a no-brainer. You've got confluence between the two. They support each other. No problem. It's easy. Other times they conflict, like we kind of drew in that last example. There's also an art to this. And as I said before, there's also a form of niche to this for some people, right? Some people really like leaning on the long-term VWAPs. Some people really like leaning on the CVA structures. You could pick. Ultimately, what's going on here is we're looking at multiple versions of truths across different time frames, guys. And there's not one that's necessarily so much better than the other, unless you have multiple time frames telling you we all agree with each other except for this guy over here, right? So what are we going to do for this full top-down approach to rank and distill to get to our narrative by looking at a bunch of narratives, but our main hypos and whatnot? For each of the 4 long-term VWAPs, we'll look at, generally what's the current condition. That's just kind of a starting point. And then those really important things, recent key rejections, likely destinations, the overall strength of that narrative. Where are we within the cycle of that narrative? Are we almost to the destination, or are we more early phase where we've recently had the condition change? That matters in terms of strength of narrative. Confluence or dissonance even on a single time frame. You might be breaking out of prior value, but still rotational and developing value. One thing I'll tell you, it's not on the slides here. I tend to lean, when it comes to long-term VWAPs, I tend to lean much more on the developing values of those 4 time frames than I do their prior values. When it comes to prior value, I tend to rank structural custom composites that I taught you to do higher than I do VWAP based prior value areas on standard periodicities like the month and the week, right? They still work, don't get me wrong. I kind of wish they didn't, because it doesn't exactly bode well for perfect, like we need to attach value to balance and that type stuff, which I always harp on. These things still work for whatever reason. So then we boil that information down after we go through those 4 time frames, figure out what's clear, and you want to get to like a long-term VWAP summary from the year to the week. Summarize it. Here's what's most clear. Here's my take on the narrative from the general long-term VWAPs. And it could be that my read is that there's just nothing really clear, or that there's very clear dissonance between XYZ and ABC. Remember, you're not seeking clarity as the answer we need to arrive at every day. You need to determine when and where there's clarity and when and where there's not. Then Do the work we've been doing. Same type questions, current condition, recent rejections, destinations, all that good stuff. Strength of the narrative around your CVAs, if and when you have them. Prior value you defer to if you don't have multiple day composite value. And now assess the two. Do they agree with each other? Are they very dissonant? Is one much more clear than the other? And so I can't necessarily give you, a 10-step process to do this. It's complex. I think it does begin to, at times, come down to kind of niche and decisions and maybe a little bit of art form as opposed to just pure analytics. But we try and be as analytical and as objective as we can. I'm not saying we're going to kind of, flip a coin every day. A lot of times you're going to have clarity. I think you guys have been following most of you, if you're, you probably followed my DMIs or something and have a sense for the levels and the bias and whatnot that I come up with day in and day out. So you realize it's not, some kind of art form coin flip type deal. And a lot of my students have the same read. You guys are not going to have them this week necessarily or next week necessarily, but over time, with a lot of hard work and practice and mistakes and reviewing those mistakes and comparing notes with your peers, you're going to develop the same reads that I do essentially. Examples. Let's get to charts. I told you we'd spend a lot of time just talking about concepts and all this kind of stuff, and then we'd really hop into the charts. So let's do that. All right. Let's go to August 31st. It's just like, I think that was a Monday or something of like 2 weeks ago. We've got the S&P pulled up. Here's the DMI for the S&P. So here's the levels. Let's take a look at why this came about. Looks to me like, because it's dotted lines here, I pretty much went and said, I'm focused on a CVA. So let's see. I can already see the CVA right there. Couple day CVA, and looks like we were opening just above that. This was in the really high ramping phase. So let's get a global crosshair for everything. Here we go. So coming into the open, we're hitting some extremes. So I'm leery. So on the year, we're right here. Not quite hitting the 2 yet, but we are above the 1.5. On the quarter, we are like riding the 2. And I know that we've been in a fast trend type mode. We held the 1.5, and now we're even starting to hold the 2 as we come into this session on the 31st. The same thing on the monthly. What does the weekly look like? The weekly, almost the exact same thing. It's actually riding the 2. So that's why when I first saw the prep here and I saw the CVA, I was like, why wasn't the composite value high a green level? Probably because I'm balancing the extremes we're hitting on all the long-term VWAPs versus the fact that we're just above a 2-day CVA. So right off the bat here, I'm handling dissonance. I'm defer. I don't have a lot of levels to lean on. There's not like a fresh return pullback or an extreme fade opportunity or anything like that after a fresh condition change on any of the long-term VWAPs. They're all just fast trend, getting parabolic. So it's a pretty unique situation, really. Maybe it's a bad example, but it is what it is. But I do have some structure, and that's pretty much all I've got to lean on. And so that was my choice for the prep. It looks like I chose to perhaps say, let's fade some rotational behavior. Actually, this was an imbalance pullback, right? This was the first down arrow. And this, I can't tell you exactly why, just glancing at this here, I liked the short. Let's look at the write-up. Giving a much needed wick to the weak highs from last session. Yeah, okay. So if you don't look at the overnight session, you can see that there was a really kind of weak looking high area right there. And so we actually, this was the first short off that area, and then we go rotational intraday. So you think, okay, could you get longs here? But I don't love the longs yet because we haven't actually tagged our composite structure. And so in fact, I'm still kind of leaning short depending on what happens here. And what is this overall? This is an up thrust pattern. We have two swing highs here. We go through it. It's confluent with VWAP, and the sellers slam it, and that's where you want to join them. And now you're looking to get involved here. In fact, I remember having an ad in this area, and it ultimately didn't work out. But I remember this day well. I was short from here, and I was looking for the overall return pullback of the CVA confluent with the imbalance pullback of DVA to get this destination down into here. The recipe is there for the shorts. I liked the shorts because we're on those extremes on the long-term VWAPs. Once that's all said and done, and it doesn't play out, obviously I stop out of this position somewhere in here. I said I liked the long, right? From there, bulls are in control. We had to wait a long time for the next trade, but it was something of a retest of our key line in the sand. You had to be quick, blah, blah, blah. Well, what is that? Well, that's this right here. If we failed to hold inside the CVA, and I gave the shorts a chance, I was initially leaning short even though we were above a 2-day CVA, and then we try and get that play, it fails. Now I'm looking extreme fade all day around this zone of a breakout pullback of the CVA and extreme fade of our DVA. And I probably just scalped it across to developing value because I am so leery of being long at these extreme prices on long-term VWAPs. Woo! Just one simple day right there. Look at how much. I mean, on one hand, it's like, wow, that's a lot of stuff and a lot of things you're putting together there. But on the other hand, it's still simple. Extremes on all the long-term VWAPs. So I'm kind of bearish, but we are above a CVA. I gave the bears my first opportunity at risk to continue to go with that. One was with an imbalance. One was kind of a cheekier play, if you will, from VWAP with an upthrust pattern. Poor highs from the prior day. It was good to take them out on the RTH session, even though they'd been taken out overnight. That's exactly where it played out. We gave the chance, the downside trade, a chance to work. It didn't. Now we shift gears. Rotational intraday. failed to hold inside a CVA, we'll fade a lower extreme to get long. Easy. Let's do another one. Yeah, Rafi, good question. That is something I've left out of teaching you guys. And I will go ahead and tell you, it is acceptable. Rarely, hear me out, guys. No one ever wants to listen. All you sorry old students on this call, you never want to listen. Don't trade from VWAP all the time. Okay. I'm being facetious. Trade from the extremes. Take the setups that I've taught you. But yes, once in a blue moon, if and only when, as you see all the students admitting their guilt, if and only when VWAP really makes sense from a trade location, from a narrative perspective, from an actual reference right there, and like I had an upthrust pattern, plus the reference, plus the bias, then you can do it. It should occur very rare. Like I said, most of the times you should be fading extremes, going with imbalances. The middle area of VWAP, especially when VWAP is flat, is a very choppy place, and it will chop you up. Okay, let's keep going. Okay, so the very next day, I haven't pre-prepared any of this if you can't tell. Okay, so bullish S&P, as long as we can hold above 3490 to 96 area where we have the two bull levels posted for you. Bearish, if that breaks down, plenty of room to fall, as we've been noting, right? So in these preps, I've been saying caution to the upside, guys. A lot of room to the downside, blah, blah, blah. So let's get to 9-1. So it's a new month and a new week. 9-1 is now Tuesday. Was oh, we just did 8/31, which was a Monday. Okay. Really not sure where these. Oh, I don't know why that's prior value there. Anyways. So we do have prior value, which we're opening inside of. We'd still have our 2-day CVA. And it looks like overnight we'd come in and rejected the CVA. So we're bullish from that general area. I had another level, and we've rolled over, so I guess I could reverse engineer it by, I guess it was about 10 points. So let's see, this is 85. That would have been about 95. That is around 90. So it'd be around 80. So I have this bullish level here at 80. And honestly, it may have been where I got dialed into the 1.5 holding on a fast trend and the 2 holding on the quarter. So 1.5 confluent with the 2. Very, very odd, very, very atypical type situations there. Not something you're going to see commonly used as a reference to lean off of, going with more fast trend on long-term VWAPs. Again, this was an unprecedented type move higher here we saw. So it looks like that's what I did there. Let's just double check the overnight. Yep. You know, I may have highlighted that poor low actually as well, which was around the same spot as those other references. So there's something about that in today's prices, 80 level that I liked. So anyways, bullish from there. I think I marked, it looks like prior value high as kind of a spot to watch out for as well. So show it to you again. There's the composite value high. There's that poor low and fast trend multiple references on monthly and quarterly. There is the composite value low, and here's prior value high. So the fact that we had accepted back into that overnight, I wanted to leave that as a reference. So mostly structural references except for this. Well, I guess I can just, what did we like? So we had a long early on and then a couple longs late. What did that look like? So right into the 930 open, we're pushing a lower extreme. It's from our composite structure area. In fact, it's kind of the stacked two bullish references that we kind of wick into right there. This is a simple extreme fade. Where's the acceptance picture? It's clearly higher. Is there anything that's bullish about, bearish about this market? Sure, prior value, right? Let's just highlight it. That's probably why, in fact, from a long time, I don't know why that level was there. But anyways, that level was already there when we started. So we had held under there overnight. So, you know, it's a great place as you make the rotation away from the CVA across developing value that you're also traversing the prior day's distribution, which, by the way, is less important than the CVA, which is why we're long from here instead of short from here. But we get long from the low of day, and you know it's probably best to just come out there unless you're really thinking it can go much higher. For me, again, I'm continually leery of just holding core positions long in this environment, as I thought the move was getting very extended on the long-term VWAPs. So probably good there for just kind of a scalp or position play. But then what happens is we start to hold higher, don't we? We really ramped, you know? And if you go back and look at these four arrows that I drew later in the session, well, here's the first part we scalped. And then we start to see that this is holding, but there's no DVA setups in this sequence. It's still rotational. But then guess what? First arrow is here as we go imbalanced up. And there's your other three arrows. So you're seeing exactly the whens and the whys of my recaps and whatnot here. See, I was more conservative about getting long. You know, am I getting long VWAP here? No, it's in the middle of prior value. Am I adding to positions? Am I trailing stops? No, I probably just scalped across this. And then I waited to get a developing value area trade location that made sense for the current condition intraday based on my half skepticism about higher prices and the fact that we have indeed rejected a 2-day CVA and now are offering breakout pullbacks from prior value as well. The market's still hot. I'll go with it, but you're going to have to show me that you can get imbalanced up and hold it. And that's what I did. Beautiful stuff. So many lessons from each and every day. Doesn't look like I did anything other than pound my chest a little bit about in fact, I said no prep, right? This was this day. Yeah. No insight today. One single comment. We appear to be heading for 35.85, whatever. We can overshoot it. If we wick this area, I'll start to look for shorts as long as intraday conditions tell me being shorts appropriate, right? So that's what happened. And that's that push right over here into the yearly +2. And I did start shorting there. I didn't crush it from that exact location, but I shorted more overnight. I got mine on the down move, but I didn't short that ramp. I did short once we cracked from that area into the close, but I didn't hold it for like a swing short for 200 points. I didn't do that. Let's go to another day. This was the wham bam day in the S&P. Yes, we did reject the important area, blah, blah, blah. The first real test is 35.55, which we're coming into right here into the open, this neutral level. We'll reverse engineer what that was. If buyers hold that, we have the potential for chop. But if it breaks down, we have a great situation for more downside. So I was aggressive, as you might could imagine. It's kind of cool. We're walking through these chronologically day after day rather than just like, here's a picture perfect example for you of a return pullback. You know, like this is like real life day after day. Anyway, so you already understand that I'm kind of bearish this market based on the long-term VWAP extremes. And then we had a whole cluster of references down here, which it looks like we got to, man, I'm probably not going to replicate every one of these for this example here, but we'll do what we can. Let's take a look. Let's see what we might see coming into the open and what we might think. This is 9.3. Here's the open. Let's turn on my global crosshair. So all our charts go to that spot. Turn it back off so it doesn't go crazy when I do this. Okay. So right into the open, those first two little short arrows. Well, let's do the analysis. Okay. First major inflection. Who can tell me in the chat by looking at my long-term VWAPs what it is? No, it's not the yearly +2. First neutral inflection, which is the test for the bears to see what they can do. Yes, it's the week. We have a new month and a new week, so the month is pretty much irrelevant. And other than it's, you know, prior values always count, guys. Prior values, they're never repetitive. If they are, it's purely coincidental, and it's real confluence. Developing values on these long-term VWAPs are the ones. So if we zoom into this a little bit, just so you guys can see better, here's what I'm talking about. Here's where we rejected, you know, the +2 from the yearly and all that stuff. But what I'm saying is, what is this neutral reference that I'm saying is the first test for the bears? And that is, are we going to stay imbalanced up on the weekly or not? Remember, we defer to those lower time frames and start to get other trades that allow us to participate in some of the higher time frame stuff. And for me, I was really aggressive because if you look, the picture on the weekly, in fact, should still be bullish based on the acceptance picture there, right? I mean, we're above it and we're just coming into it. So that's why I keep saying the word aggressive. It's very aggressive of me to short there, but I have so much that I'm bearish about. The market's confirming it. I'm going to stick my neck out a little more than normal, but guess what? It's perfect imbalanced pullbacks right into the open, right? Where's the open? Here. So it's these. Drew a couple arrows in this area to get involved. Maybe I was even talking about these. I don't know. Any of these are fine. And you're already starting on a micro level. Here's the precise level weekly developing value area high was. So any of these shorts are on a micro basis, on a short-term intraday basis, below weekly developing value high. But you always do want to be aware of kind of like rhythm. Like, see this right here? This is a perfect example. This is a beautiful imbalanced pullback. But intraday, you would have been below weekly developing value area. So that's why I continue to stress this is very aggressive. We have acceptance changing intraday, but on this higher time frame on the weekly, it should technically still be a bullish zone. But remember my priorities as I rank and distill. I was really quite excited about the short. I thought there was huge. I'd been saying it in my DMI for a week. Big downside if we can crack. We got big downside if we can crack. You know, I didn't feel like an idiot. It wasn't happening. And I continued to find ways to get long in trading what is. Not, you know, Mr. What's his name, you know, drawing down as it, you know, says it's got to go down. You know, that's not what we do. Anyways, beautiful imbalance pullbacks, aggressive shorts early, absolutely cracks. Oh, where's my next arrows on the chart here? These two. Then we'll have one more later, you know. Oh, well, it's just the next imbalance pullbacks we get. And whatever, you know, this is a CVA. Here we are, right? This was that 2-day CVA. That's what this zone is. That's why I had kind of a cluster of levels in the area. Where's the weekly? What's happening? What is happening? Okay. So the lower level down here is we're finally interacting with the confluent area, this solid level right here. Sorry, there you go, here. That is the first form of prior value we're running into, and that would be found here on the weekly, and it's confluent with the monthly as well. So a little bit of bullishness from there, but hey, that leads to the return pullback of the CVA. Huge rotation intraday compared to the size of the CVA. So guess what, guys? That CVA, it's one line for all we care. There is no like little return pullback. So now we're bullish because we're back in the CVA. When you're this far detached from current rhythm versus like the size of a 2-day CVA, it's one level. And you either need to fully accept above it to change, or you need to continue to accept below to change your view of acceptance relative to that CVA. It's one level. So anyways, there's the two arrows short, imbalance pullbacks. And I did have a bullish level pre-market down here. Pre-market prep, bull level. What is it from? I have no idea. What is here? Oh, quarterly developing value high. I mean, it's a major thing, right? If we're going to sell off from the +2 and the, you know, beyond the +2 here, one of the first things we're going to get to that's very, very important is quarterly developing value high to see if the imbalance there can persist. And that's exactly what this bull level is here. Okay, let me try and go find a little bit more of a regular example, not like that. I mean, that was great to do, crazy volatility. Guess what, guys? One of the craziest days in the S&P, right? I mean, this was massive type day. Like this was like, you know, one of the craziest days in a decade, right? I know Brexit, Trump election, blah, 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 but this is up there with them. And the references work, the DVA works, you know, it just works. So let's go try and find more of a hum-ho day and talk about here. Let's see. I don't know. It's been some pretty good volatile stuff lately. I don't know. Let's look at the 9th. What do you say? Okay. Coming into the open on the 9th. We would have been using this older CVA structure before the 9th started to form a day and a half of balance there. What else is going on? Let's see. The yearly has just bounced from the well, I'm not going to say confluence yet. I just saw it out of the corner of my eye. But anyways, the yearly is bouncing from, oh no, sorry. I thought I turned it off, but I turned it on. Now it's off. There we go. The yearly is bouncing from its imbalance pullback, right? That's what the overnight low was. And it was confluent, as you can see, with the quarterly. But quarterly's gone rotational, right? So this is a really bearish area to look out for as we come into this day. It would have looked like, this, I guess, as we're coming into the day. So that's going to be a bearish level. This was a very bullish level. And that's what these levels are, right? That's yearly. That's quarterly. There's some other stuff in between. Got some CVA structure, as we said. What does the monthly look like? Monthly is interesting. It's imbalanced down against this kind of 65 area right here. And that's confluent with the week, but it looks like they're the same, right? We can't use, they're the same thing because it's a new month right at the start of the week. So they're the same. Prior value confluent down at this level here, which is kind of where we held back into after wicking below it in the overnight session and then continued to drive. So in fact, by the time we come into the open, we're kind of compressing against the imbalance down on the week. And as we know, we're bullish from the year. So anyways, what do we like in terms of trades? Well, imbalance pullbacks, right? The imbalance down on the monthly and the weekly, well, just the week, breakdown, that fails. And so, there's opportunities to get long along the way as what develops. We're bearish at higher prices, aren't we? Because of the quarterly. The quarterly giving that extreme fade at its developing value high. Now, is it always that precise? No way. In fact, it didn't quite make it there, right? But could it have done what it did over here and wicked up instead of stopping at 34.14? Could it have gone to 34.40? Easy, right? 34 points, 36 points. 26 points. A large range, okay? Quarterly is not a precise instrument. It was in this case, but just keep in mind, you can't expect that kind of perfection from it. So that's what we had. Some imbalanced pullbacks along the way, even confluent with some breakout pullbacks of CVA structure. And then these last two to kind of finish off the move into the reference. So sounds kind of simple, right? I mean, a lot of this stuff is kind of, I know how to lay it out there. I know how to think through it very quickly. I know how to deliver it and talk about it. But when you jump into this, you're going to feel lost. You're going to feel, a lot of cognitive dissonance around, well, how do I handle this versus that? I do think that we've had a lot of clarity around some of these narrative reads as of late. But look, you know, some of the longs I was taking in different things were not necessarily with composite structure, which you guys have seen over the past couple of weeks. Like, you know, you probably look at my DMIs and whatnot, and you say, well, heck, he's not doing what we're doing. What's he teaching us? The composite structure stuff is great. There's nothing remotely lesser about composite structure versus long-term VWAPs. Long-term VWAPs is maybe going to be the shiny new toy you're interested in, but composite structure is absolutely critical and absolutely fantastic. And a lot of times I will defer to composite structure to almost like that lower time frame like we talked about to get into some longer term VWAP ideas. Not always, but a lot of times. All right, let's go back and talk about developing this week. Composite profiles most certainly help coming up with your narrative, including using the long-term VWAPs. This week's all about narrative. Yeah, you're still going to, you know, feel free to trade extreme fades and balanced pullbacks that make sense with narrative. Continue to have fun, get some trades in, but I don't really care about your trades right now. I could care less. I want you guys focused. The most important part of your day is your pre-market preparation, ranking and distilling information to get to your hypos. And by the way, now that we're getting, I forget what we called it, the pinnacle of narrative reading or whatever, or narrative reading in its highest form, hypo 1 should be, just so we're clear, your most likely scenario, what you see as most likely. Hypo 2 should be next most likely. Hypo 3. Don't kill yourself over, you know, oh, should this be hypo 2 or hypo 3? I don't know. Don't worry about it, right? But if you do have clarity around this is most clear, this is most important, make it hypo 1. Don't make it hypo 3. So priorities on narrative. Your pre-market prep is the key piece of daily work. You should complete one for both crude and S&P. Let's get more reps in. I don't care if you trade both of them or not. Do a prep on both of them. Share it with the room. Post your preps before the open with the room. Use your peers' work as well as my DMIs to check your work. Did you nail it? Did you miss something small? Are you confused about why Merritt has this line on his chart? Talk about it with each other. The collective group will figure it out. And if I need to come in and help, I will. Did you miss something huge, right? Don't beat yourself up too bad. You think I ever missed anything huge? You think these days I never, ever miss anything? It's rare, but yeah, I make mistakes. So you're going to make a ton of mistakes, just like I did trying to learn stuff. You know, and sometimes Johnny will say, I'm bullish based on the CVA breakout or the CVA failure, return pullback. And Sally is going to say, I'm really focused on this, you know, rotational monthly thing here. I think it's got a lot of rationale to kind of remain rotational based on XYZ. Sometimes it's just going to be a bit of a matter of choice, like we talked about, two competing narratives, roughly equal, you know, hey, you might both make money, you might both lose money, you know, blah, blah, blah. One of you might knock it out of the park because you picked the right one, but that's just kind of lucky. And the same goes for me in those situations. And then the nightly recaps, I'm going to give you kind of like we did today, right? Here's my full take on my prep, how I saw things, and why I ranked and distilled and ended up at what I did in terms of hypos for the day. Should be a fun week. We are opening up eyes to see things that some of you previously thought unattainable. It's going to be pretty sweet. Yeah, some good questions here. For crude oil, my kind of standard intraday time frame is 1,000 volume. That's pretty good. Look, if you want to default to any time-based charts on, for your trading time frame, a 3-minute chart I think is a good one. I'm pretty hot on a 3-minute chart right now. I like it. But yeah, there is no magic when it comes to setting up the. In fact, you know what? Let's do it. Crude oil. Let's do it. Duplicate this chart. We'll just start with the yearly. Historical chart. 2,000 something days. VWAP. Yearly. Extend the VWAP. And DVA. Oh, sorry, I'm sharing the wrong screen. I was like, something does not look right here. It's not back adjusted. I knew that was not what the yearly looks like right now. Volume-based rollover back adjusted. All of our charts should be that. So I need to fix this one too. There is our real year. All right, let's duplicate this again. Make our quarterly. I don't know, volume, let's start with 150,000. I'm just gonna make it a simple 90-day. You probably need a few more days in there. VWAP, quarterly, extend the VWAP and developing value area. There you go. Let's duplicate that chart. Make our monthly. Let's get the monthly on here. So you see it's way, I can see 1, 2, 3, 4 months all in the same view. So what's volume should it be? Well, it's too large of a chart. So, 30,000. See what that looks like. Pretty good. Let's see if we could see all of August on this. Pretty much, right? So, that's a decent view. You could go a little smaller. You don't have to see all of it in its shrunken view, but you would most absolutely want to see all of it in more of like a normal size view. So this is, you could almost see 3 periods here, 2.5. So, we could go a little bit tighter, but I'll leave it. Let's duplicate that chart and make our weekly. And again, let's go to like 8,000 or something. There's nothing magic. I am just spitballing these numbers. You can pretty much see a full week just about on this small chart, though it's plenty good. So there you go. I'm not saying these numbers are what you should have. Yeah. In fact, I think we could go to 100 or something on the quarter. And again, you want to load more days there so that you can get a proper prior value. You see, it's calculating prior value off not even a full quarter. So you do have to come in and load, more days. There. All right, guys. I think you have let's go back and show real quick the directive for the week. Make sure you post them. That's really important. Share your work. Don't be afraid if it's stupid or whatever. It's going to be stupid sometimes, and we're going to call you out on it, and that's going to make you better. Otherwise, you're going to live in stupid world all by yourself and remain that way. So put it out there, get the critique, and we'll all get better together. That's what we're here to do. Cheers, guys. Have a great week.